Here's what they disagree with me about: index funds over mutual funds. Here's my take. I'm not against index funds. I think they have a time and a place. And for me, that's outside of retirement accounts. So if I'm investing in a brokerage account for whatever purpose, because I want to have access to money before I retire, I'll put it in a brokerage account in an index fund. And if it's in a retirement account, I choose actively managed mutual funds because we're hoping that those fund managers are hand selecting the companies they think will beat the market, which is, again, passively managed in the index funds, just tracking the index, the top 500 companies in the US, for example. So that's why I choose mutual funds and when I choose mutual funds, but I'm not anti-index funds. I think if you're doing that, you're doing the right thing. You're betting on the racetrack instead of the race horse, which is risky.
I do respectfully disagree with George here on this. So let's correct one major point here, and that's that an index fund can be a type of mutual fund or an ETF. So they're kind of intertwined. So the conversations shouldn't be mutual funds over index funds. It's really more about active management versus passive management. Now, for George, he says that in his personal circumstances, he prefers to have the active management for his retirement accounts. And again, that's totally fine because when it comes to personal finance, you should do what you want to do and what you will stick with. But when it comes down to the data and what the long-term approach, pushes towards, it does show that those passively managed funds do outperform those actively managed funds, especially over longer time periods. And sure, you could find a specific time in a short window where active funds will do better, but again, that is just cherry picking. So in my preference, I do prefer those low cost passive investments like VU or VTI. But let's not forget that doing either of these is much better than just having your money sitting nowhere in no man's land. And also your contribution rate to your accounts is a major factor as well. So don't overlook fees, but don't overlook everything else as well. And for better advice from a CFP Pro, subscribe.